plutone. আসসালামু আলাইকুম।
ওয়ালাইকুম আসসালাম স্যার।
ইয়ে ভালো
জি
রশিদ?
আলহামদুলিল্লাহ, ভালো আছেন?
আছি আলহামদুলিল্লাহ, আছি ভালো আছি আলহামদুলিল্লাহ। ভালো না সবাই এমনি? হ্যাঁ, থ্যাংক ইউ মাই ডিয়ার, থ্যাংক ইউ। দু এক কথা বলি একটু, সেটা হলো যে by this time you have received of your concern enrollment notice or admission notice to sit for the exam. পরীক্ষার ফর্ম ফিল আপের নোটিশ হয়তো ইস্যু হয়ে গেছে, তো এই জন্য ওয়েবসাইটে আছে বা বিভিন্ন জায়গায় সে অনুসারে those the students will sit for the exam make enrollment। অর্থাৎ কি, যারা অর্থাৎ আমাদের প্রিয় ছাত্র ছাত্রী ভাই বোন যারা পরীক্ষা দিবেন, ইউ মাই ডিয়ার অল, ভাই বোনদের বলতেছি আর কি, তারা সে অনুসারে এনরোলমেন্ট করে পরীক্ষাগ্রস্ত হবে। পরীক্ষায় শোনা যায় রশিদ আমার কথা দাদা?
স্যার শোনা যায় স্যার।
হ্যাঁ, আজম, থ্যাংক ইউ। পরীক্ষার দুটো মেন ক্রাইটেরিয়া অর দ্য ইনক্লুসিভস বলে, তাহলে কি হলো, টু মেজর নর্মস ফর অ্যাপিয়ারিং এট দ্য এক্সাম। এক নম্বর কি, ক্লাস এলিজিবিলিটি, এই যে আপনারা ক্লাস করতেছেন মাই ডিয়ার ইউ অল, সেটা হলো কি 75 অ্যাটেন্ডেন্স না হলে বিফোর এক্সাম, এবং আমাদের কনফার্মেশন এটা তো অটোমেশনে হয়ে যায়। তো এখানে পরীক্ষার একটা শর্ত হলো আপনার ক্লাস এলিজিবিলিটি 75 ভাগ থাকতে হবে, ক্লাস সার্টিফিকেট প্রয়োজন হয়। আর আরেকটা যেটা হলো যে ফিটনেস সার্টিফিকেট, দ্যাট ইজ ফার্ম ওরিয়েন্টেড and also signed by your concerned principals। আমাদের রেসপেক্টেড যে সিএ মেম্বার, আমাদের ইনস্টিটিউটের সিনিয়র বা এসিএ এফসিএ যাই হন, ওনার স্বাক্ষরে একটা ফিটনেস সার্টিফিকেট। ফিটনেস কখন, বিফোর 3 ইয়ার্স, অর্থাৎ সিসি বলে পোস্ট কমপ্লিটেড ডিউরেশন, এর আগের অবস্থাকে ফিটনেস বলা হয়। আর যখন 3 বছর হয়ে যায় সিসি হয়। তাহলে বোঝা গেল যে পরীক্ষার দুটো জিনিস কাগজ দিতে হয় অ্যাজ সাপোর্ট পেপারস অফ দ্য রেকর্ড। সেটা একটা কি, ক্লাস সার্টিফিকেট বা ক্লাস এলিজিবিলিটি, এটা আমরা দিয়ে থাকি, দেব আইটি এরিয়াতে। আর আরেকটা হচ্ছে কি যে সাইন বাই দ্য কনসার্ন প্রিন্সিপাল, অর্থাৎ যে যার যার প্রিন্সিপাল আইডি কার্ডে যেটা লেখা, ওনার স্বাক্ষরে একটা ফিটনেস সার্টিফিকেট দিতে হয়। ব্যতিক্রম হলো প্যাস, পিরিয়ডিক্যাল স্টুডেন্টশিপ, ওটা শুধু ক্লাস অ্যাটেন্ডেন্স সার্টিফিকেট বা এলিজিবিলিটি কনফার্মেশনটা পেলেই পরীক্ষা দেওয়া যায়। তাহলে আমি একটা জিনিস ক্লিয়ার করলাম, সেটা হচ্ছে কি প্রিয় ছাত্রছাত্রী ভাই বোনরা, সেটা হচ্ছে যে পরীক্ষা দিতে দুটো জিনিস প্রয়োজন হয়। একটা হলো যে ক্লাস এলিজিবিলিটি বা ক্লাস সার্টিফিকেট, সেকেন্ড হলো যে ফিটনেস সার্টিফিকেট, অর্থাৎ প্রিন্সিপালের স্বাক্ষরিত প্রত্যয়নপত্র। এই গেল দুটো। আর ব্যতিক্রম প্যাস যারা প্রি আর্টিকেল স্টুডেন্টস, দ্যাট মিনস হু আর নাও আন্ডার গ্রাজুয়েট সিচুয়েশন, ওনাদের শুধু আমাদের ক্লাস এলিজিবিলিটি হয়ে যাবে। আর পরীক্ষার ফর্ম ফিস ফিল আপে যেসব ফিস নির্ধারিত আছে, এগুলো আপনি ওইভাবে করবেন, অনলাইনেও করা যায়, আবার যদি মনে করেন ফিজিক্যালি তাও করা যেতে পারে। এবং কনসার্ন ডিপার্টমেন্ট এক্সাম ডিভিশন বা এক্সাম ডিপার্টমেন্ট, এই এটা একটু মাথায় রাখি। দোজ দ্য স্টুডেন্টস হু অলসো পেইড হেয়ার বাই such information, please also convey to others। আমার কাছ থেকে যারা শুনলেন ওনারা অন্যদেরকে জানিয়ে দিলেন। হ্যাঁ, and it is being recorded, রেকর্ড হচ্ছে, রেকর্ড তো আপনারা শুনেন, এটা শূন্য হয়ে যায়। আসি এবার অন্য প্রসঙ্গে। আমাদের শ্রদ্ধ সিও স্যার চলে আসছেন মনে হয়, বা আসবেন, আসুন আমরা 2-3 মিনিটে স্যারকে হ্যান্ড ওভার করে চলে যাব। যেটা হলো ছাত্র আরো কিছু আসুন, তারপরে আমরা স্যারকে রিকোয়েস্ট করব। একটা হলো কি, যে ক্লাসটা আমাদের হয়তো পরীক্ষার ন্যূনতম আমার ধারণা 12 থেকে 10 দিন আগে শেষ হয়ে যাবে। কাজেই ইউ আর গেটিং প্রিপারেশন পার্সোনালি ফর ইউর রেস্ট অর ইভেন প্রিপারেশন। এই জন্য আপনি 10 দিন পারবেন পার্সোনাল স্টাডিজের জন্য, আপনারা সময় নেবেন। ক্লাসগুলো মন দিয়ে করেন, এমনি আপনারা থাকেন ভালো, অসুবিধা নাই। যার যার এনরোলমেন্ট আছে দেখলাম ম্যাক্সিমামই থাকেন, গুড সাইন। অনলাইন যেহেতু কম্পিউটার বেস এক্সাম, কাজে অনলাইন ক্লাসটা আপনাদের জন্য প্রয়োজন, এবং ইট হ্যাজ অলসো দ্য সিগনিফিকেন্স অল আপন ইউ। এজন্য অবশ্যই ক্লাসে উপস্থিত থাকেন। এবং অনেক টিচার এক্সাম নিচ্ছেন, মক টেস্ট নিচ্ছেন অনলাইনে ইয়েতে, কাজেই হিয়ার মাই রিকোয়েস্ট ইউ অল and get motivated upon you to sit for the exam. পরীক্ষায় ভয় পাবেন না। আর একটা হচ্ছে পরীক্ষা যত দিবেন, আমরা তো কিছু পরীক্ষা দিয়ে আসছি, পরীক্ষা যতই দিবেন আপনার একে বললে যে ক্যাপাবিলিটি ইয়োর এনহ্যান্স অফ হোয়াট পাওয়ার অফ রাইটিং, রিয়ালাইজিং অর রিয়ালাইজেশন, এগুলো হয়ে থাকে পরীক্ষা। এই যে কাপাকাপি ইতস্তত বোধ করা, অ্যাপ্রোচ অফ ইয়োর সিকোয়েন্স, এগুলো পরীক্ষা দিতে গেলে ছুটে যায়, এজন্য পরীক্ষা ভালো হয়। অনেকেই করেন কি মডেল টেস্ট নিজেই দেন। কেন? পরীক্ষায় যাতে লেখাটা স্পিডি থাকে, সুন্দর থাকে, এবং একটা প্রিপারেশন রিহার্সেল। তো এই জন্য এটা একটু খেয়াল রাখি, কাজে পরীক্ষা থেকে ভয় পাওয়ার কারণ নাই। আমাদের শ্রদ্ধ শিক্ষকগণ যারা পরীক্ষা নেন থাকেন, আপনারা সকলে দিবেন, এবং পরীক্ষা দিলে এই ধরনের উৎপত্তি আসে। এই গেল। আর একটা ইস্যু হলো যে ক্লাস চলুক, আরো যদি প্রয়োজন হয় আমাদের যেমন প্রধান নির্বাহী স্যার আমাদের স্পেশাল সেশন নিচ্ছেন। এটা কি? এটা হলো ট্যাক্সেশন, অত্যন্ত গুরুত্বপূর্ণ সাবজেক্ট ফর ইউ টু অলসো হোয়াট ফুলফিল দ্য রিকোয়ারমেন্টস ইন প্র্যাকটিক্যাল লাইফ। যেমন আগে বলা হতো না যে অডিটিং, অ্যাকাউন্টিং এগুলো বেসিক, ওকে, কিন্তু ট্যাক্সেশনটাও এখন বেসিক সাবজেক্ট রূপান্তর। কারণ কি, ট্যাক্স পে করতে হয়, নিজের ব্যবহারিক দৈনন্দিন লাইভলিহুড দরকার হয়। ইনকাম ট্যাক্স প্র্যাকটিশনারও আপনি হতে পারেন আফটার কমপ্লিশন অফ গ্রাজুয়েশন and under the I think appearing the exam of NBR ওনারা করে থাকেন। এই জন্য ট্যাক্সটা আপনার জন্য অত্যন্ত গুরুত্বপূর্ণ, কারণ আপনি সিওফও হবেন, আপনি কোথাকার জিএম হবেন, কোথাও কোনো অফিসে পারফেক্ট প্লেসে হয়তো আপনি ডিএমডি হবেন, তখন ইউ শুড হ্যাভ টু অলসো মনিটর দ্য ফাংশন অফ ট্যাক্সেস, পেমেন্ট এক্সেট্রা। কাজেই বোঝা গেল যে দৈনন্দিন জীবনে আপনার চার্টার্ড অ্যাকাউন্টেন্টগণ যে যেখানে থাকেন, তাদের কার্যধারায়, তাদের কার্যাবলীতে, অফিসিয়াল হোক বিজনেস হোক, ট্যাক্সের গুরুত্ব অপরিসীম। তো কথা বলতেছিলাম যে রেগুলার টিচার যারা ওনারা নিচ্ছেন নিন, আরো গভীর হবে। আমাদের শ্রদ্ধ সিও স্যার আজকে তৃতীয় এবং চতুর্থ সেকেন্ড সেশন করেন, যতদূর পারা যায় আমরা স্যারকে রিকোয়েস্ট করে আপনাদের কাছে কন্ট্রিবিউশনে এনে থাকি, আনবো, অসুবিধা নাই। আর এখানে আরেকটা সুবর্ণ সুযোগ, আমি বাংলা ইংরেজি মিশিয়ে বলতেছি ফর বেটার আন্ডারস্ট্যান্ডিং অল অফ ইউ। একটা আমাদের টিচারেরা ম্যাক্সিমাম বাংলা বলে, আসলে মিডিয়া অফ ইনস্ট্রাকশন ইংরেজি। আপনি যখন সিএ হবেন, যেখানেই ফার্মে থাকেন বা প্রাইভেট অথবা আপনি কমার্শিয়াল বা ফিনান্সিয়াল ইনস্টিটিউশনে, মিডিয়াম ম্যাক্সিমামেরই ইংলিশ। So it's a great opportunity for you to also carry an influence of your create influence of English in this class. এজন্য আমাদের প্রধান নির্বাহী স্যার যে ক্লাসটা নিচ্ছেন, লেকচারটা ইজ ভেরি ওয়াইজ ম্যান। এই জন্য গুড প্রেজেন্টার, সিনিয়র সচিব ছিলেন, তো এই জন্য যেটা বলার যে এই উপস্থাপনাটা আপনারা ফলো করেন। আবার নর্মাল ইংলিশ, সিম্পল ইংলিশ, বাট ভেরি হেল্পফুল ফর ইউ। এটাকে বলে ইজি, ইজি আন্ডারস্ট্যান্ডিং অ্যান্ড ইজি কমপ্লায়েন্স ফর রাইটিং। অত ভাব গম্ভীর ইংরেজির দরকার হয় না, সুন্দর স্বাভাবিক ভাবে। এই জন্য এই ক্লাসটা একটু গুরুত্ব বুঝে, বিশেষ করে ইংলিশ যে আপনার প্রেজেন্টেশন, স্পিকিংটা, রাইটিংটা এখানে হয়ে যাবে, যেটা হেল্পফুল আপনাদের জন্য। ইউ উইল অলসো সিট anywhere but perfect place, এক সময় আপনি ভালো জায়গায় বসবেন, চাকরি যেখানে করেন। সেজন্য এটা দরকার আছে। কাজে দুটো জিনিস আমরা এখানে পেয়ে গেলাম, একটা ট্যাক্সেশনও পাচ্ছি, আর একটা হচ্ছে যে also make capable thyself to flourish English in the business area or studies purposes further in future. এগুলো একটু খেয়াল রাখি। আই অলসো কনক্লুড। স্যার এমনিতে অফিসে ছিলেন, সারাদিন ব্যস্ত ছিলেন আজকে। স্যারকে রিকোয়েস্ট করি আর যেভাবে ক্লাস নেন নিন স্যার, আপনারা হেল্প করেন। আর এটা আপনাদের জন্য একটা কি স্পেশাল সেশন। কাজে আমার রিকোয়েস্ট থাকবে অমর, আজম, আমাদের রফিক ভাই, রাইসা, শফিকুল, সবাই
ট্যাক্সের স্টাডি ম্যানুয়ালটা আমরা কবে পেতে পারি স্যার?
ট্যাক্সের এটা ওই যে হয়ে গেছে, এটা আমাদের আন্ডার আছে, কি বলে যে রিভিউইং। ওই যে বললাম, মনে হয় শোনা হয় নাই যে এ মাসের ভিতরে হয়ে যাবে। আমার ধারণা 25-এর ভিতরেই পাবেন। ওই যে আমাদের এসআরও অনেক 31 অগাস্টে লাস্ট একটা সীমা থাকে, এই জন্য ইচ্ছাকৃত নয়। পূর্বের যেটা আছে ফলো করেন, একবারে তো আদ্যপ্রান্ত চেঞ্জ হয় না মাই ডিয়ার খান আর এইচ খান। এই জন্য করেন হয়তো 25-30%। আর সবচেয়ে বড় কথা, যারা আপনাদের ক্লাস টিচার দে আর আপডেটেড। কাজেই এত ম্যানুয়ালটা দিচ্ছি, এটা প্রতি বছর প্রথম এটাই হয়, যেহেতু 30 অগাস্ট পর্যন্ত ছিল, সেপ্টেম্বর। এই জন্য রিভিউ করতে অলরেডি হয়ে গেছে, হয়তো আশা করি 25-এর ভিতরে পাওয়া যাবে মাই ডিয়ার। তো থ্যাংক ইউ। আমরা ক্লাস করি আর এত ম্যানুয়াল হবো, আছে তো ম্যানুয়াল, ওটা দেখি। আর রিভিশন পোর্শন ফিনান্স অ্যাক্ট, আমাদের সদ্য সিও স্যার আছেন, কাজেই আপনারা এই নিয়ে করেন না। রেগুলার টিচার যেগুলো সব তো আপডেটেড, আর এটা পাবেন বইটা একটু সময় লাগে প্রিন্টিং এ, এটাই ব্যাপার। আর রিভিউ অলরেডি হয়ে গেছে। তো থ্যাংক ইউ।
স্যার কয়েকটা কোশ্চেন ছিল স্যার, করা
এখন
যাবে?
আজকে থাক, আমি আবার আসবো তখন একবারে সব আজম মাই ডিয়ার। আজকে থাক।
জি স্যার।
মানে সব ইয়েতে না যায়, ক্লাস শুরু করে দিই, সময় হয়ে গেছে 7:35। ওই জন্য অ্যাটেন্ডেন্সও ভালো, খারাপ না, মনে হয় ক্লাস করা যায়। আমার একটাই রিকোয়েস্ট থাকলো যে ক্লাস মিস করেন না, হোক আপনার 10 মিনিট 15 মিনিট দেরি হোক, ক্লাসে এসে আবার চলে যেন না। আর যেহেতু অনলাইন ক্লাসটা মোবাইলই বলি, এটা বলি, আপনি যেন এটা শুনতে পান সেই হিসাবে এবং দেখতে পান, এভাবে একটু ইউটিলাইজ ইউর, আই থিঙ্ক, মোবাইল আর ল্যাপটপ আর আদার্স ডিভাইস বা সিস্টেম, যেটাই বলি। তো থ্যাংক ইউ। সিনপসিস যেটা আমি তো পাঠিয়েছি, একটু কাছে রাখি আর ক্লাস শুরু করি। স্যার যদি ব্রেকডাউন দিলেন অথবা একবারে নিলেন, যেটা ভালো। আবার রেসপেক্টেড গেস্ট ফ্যাকাল্টি, আওয়ার স্যার, আওয়ার গার্ডিয়ান সিও স্যার, যেটা ভালো মনে করবেন ওটা, আর হেল্প করেন আর একটু রেসপন্স করেন। রেসপন্স না করলে আমার সাথে যেমন কথা বললেন আজম, সব হয়ে যাবে আর সবকিছু করে ফেলি আমরা করবো। ওই জন্য আমি এখন আগালাম না, শেষের দিকে পরন্ত সময়, কাজে এখন যখন আমি আসবো তখন আমরা শুরু করবো। তো আবার আমি মনে হয় যাই, স্যারকে হ্যান্ড ওভার করি। ক্যাপ্টেন আমাদের না, কি বললেন যে রফিক না, কে ক্যাপ্টেন কে?
আসসালামু আলাইকুম স্যার।
স্যার আনোয়ার হোসেন।
আনোয়ার, ভালো ভাই, থ্যাংক ইউ।
জি স্যার, আলহামদুলিল্লাহ।
ইউ আর ভেরি গুড। ওই যে মনে হয় আজম কি বলতে চাই, একটু শেয়ার করে নিয়েন, প্রয়োজনে আমার সাথে কথা বলে নিন। So thank you, sir. I am your Halim, sir. And also request you, please come in videos and just to start a valuable session. Sir, please. আমি স্যারকে রিকোয়েস্ট করলাম, স্যার হয়তো চলে আসবেন কিছুক্ষণে। আর একটু আনোয়ার, রেসপন্স করতে হবে, রেসপন্সিভ হতে হবে, সেশনটা সুন্দর করে ফুটিয়ে তুলতে হবে। স্যার আসছেন? আদাব স্যার। থ্যাংক ইউ স্যার। Students already ready and also joining the session. So I also request you humbly just to start, and you can start and let me allow to leave. আমি হয়তো বিদায় নেই, আপনি স্যার শুরু করেন। আর আমাদের আজম আছে, অন্যান্যরা আছে, সবাই সিনপসিসটা কাছে রাখি আর এগিয়ে যাই। আর কথা হবে, আমি আপাতত চলে যাই, স্যার শুরু করবেন। হ্যাঁ, আদাব স্যার, আসসালামু আলাইকুম। থ্যাংক ইউ অল মাই ডিয়ার।
Okay. Good evening to everybody, and welcome to this session. So maybe we skipped this session because of some time constraints, etc. So we'll be having a discussion with regard to the terminologies of the Income Tax Ordinance 1984. So we had one session before. That means the first session in which we discussed the concept of taxation, types of taxation, and characteristics of a good taxation system of a country, and different types of taxes, of course, as well as the necessity of realization of taxes, how it contributes to the economy of the country, and the receipts on which tax should be imposed, something like that. So that was the basic concept of income tax, what we learned in that class. And in this class, we will be discussing the terminologies, mainly the definitions. And you have to look at the Income Tax Ordinance 1984, Section 2 of 1980, sorry, Income Tax Ordinance of 1984, Section 2. That means under this section, you will see all the definitions are given here. And the definitions have been arranged in alphabetical order. So it starts with alphabet A, alphabet B, C in this order. So whenever we look at the first definitions, you will see one of the definitions is annual value. So annual value, since it has started with A alphabet, so that's why you have to learn it first. So it goes in that way. And let us see what the annual value means. And this is related to section 24, because section 24. So whenever you will learn about the calculation of house property under section 24, you should first know the annual value. That is,
Sir, would you
from the
please
residential
share your
property.
screen?
Sorry,
Sir, would you please share your screen?
share screen.
Yes, sir.
No, I have no screen with me now because I circulated the lecture note. So if you have got it with you, you can have a look at the lecture note. There you will find the definitions. Otherwise, you can have a look at the Income Tax Ordinance 1984 if you have any. So we can discuss just one by one, and if you go through your note and you will find it out. So we are discussing the annual value of a property. And as we said that annual value of the property is related to section 24 and section 25 as well, because under section 24, you will be calculating the income from the house property, and later on, you have to deduct the allowable expenditure. So annual value, you have to know first in order to arrive at the income of the house property. So what is annual value then? Annual value is the value for which the property might reasonably be expected to let from year to year. That means the question of letting out the property comes here. You will let out the property to somebody, maybe to an individual or to a company or to a NGO, whatever it is. So the value of that property, it is said that the value of the property for which the property might reasonably be expected to lend. It means that the value has to be reasonable. That means the rental value, what you are having from the tenant, that should be a reasonable value. So if you want to show the rental value to the Deputy Commissioner of Taxes, whatever amount you want to, you cannot do that. So it is said in the definition that the value should be reasonable. If it is a rental value, fine, it should be reasonable. And it could vary from 1 year to another year. That means it will not remain stagnant, or it will not remain static for each and every year. Rather, it will vary from 1 year to another year. This year, the value of the property might be an amount, and next year it could be a different amount. So it depends on different situations or factors. So for example, if this year is affected badly by economic recession, in that case, the value of the property might be a little lower. But if the economic situation of the country is better or satisfactory, in that case, the value of the property should not be lower. So generally, under general circumstances, the value of the property would rise in future. And how to determine the annual value of the property? It would determine on a number of factors like the size of the property, the location of the property, the amenities available in the property, and the value of comparable properties. Comparable properties. That means if you have a property in Dhanmondi area, and if I have a property in Jigatola area, so the value of the two properties would not be similar. So for example, the value of the property in Dhanmondi has been shown at 6 lakh taka or yeah. But the value of the property, although it is of the same size in Jigatola, has been shown at a value of taka 7 lakhs per year. So what does it indicate? It indicates that the location of the property in Jigatola is not definitely as good as that of the property in Dhanmondi. So reasonably, the property or value of the property of Dhanmondi has to be higher than that of the property in Jigatola. So if the value of the property in Jigatola is 7 lakhs, the property of Dhanmondi should be more than that, maybe 7,50,000 or maybe 8 lakhs. So while calculating the annual value of the property of Dhanmondi, the Deputy Commissioner of Taxes, if he has got the information of the property located in Jigatola, he will definitely enhance the value of the property. That means the rental value, if it has been shown by the owner of the property, would be enhanced by the Deputy Commissioner of Taxes while calculating the income from the house property. So he will raise the value of the property, which will be treated as annual value of the property. So what does it indicate? Rental value of the property is not the annual value. So you have to compare between the two. When the rental value of the property is less than the annual value, then annual value should be determined. That means annual value should be decided by the Deputy Commissioner of Taxes, and he will just calculate it at a figure which would be reasonable, considering some of the factors as I have mentioned to you before. But sometimes it might be reverse. Reverse means when the SSC or the owner of the property shows the rental value at a higher rate than what the Deputy Commissioner of Taxes expects it to be. That means the Deputy Commissioner of Taxes thinks that the value of this property is 7 lakhs taka per year. But if the SSC has shown it at 8 lakhs, in that case, 8 lakh will be the annual value of the property. Although the DCT thinks that the reasonable value of the property should be 7 lakhs. So here the situation could be reversed. And on the basis of the factors we have discussed here, the annual value of the property could be determined. And one factor I have mentioned, it should also depend on the amenities available in the apartment or in the house. Amenities means there could be some, amenities like refrigerator, like television, like AC, or microwave oven, sofa set, etc., provided by the owner of the property. So if these amenities are available, it is called furnished accommodation. That means the furnished accommodation would fetch a higher value than an unfurnished accommodation. And also there might be some amenities available inside the boundary of the apartment. And those amenities could be a swimming pool, a community hall, or some sitting places, etc. So in that way, the value of the property could be a little bit different or higher. So these are the factors that you have to take into account while calculating the annual value of the property. And sometimes the annual value of the property was called bona fide annual value, but nowadays this is called annual value. And annual value could be determined for the residential property as well as for the commercial property. So in both cases, the income of the property has to be calculated. That is, house property could be calculated. And a house property could be a commercial house. That means a shop. And residential property could be an apartment or flat or an individual building. So this is something which you should keep it in mind, that annual value is very important, and the annual value has to be determined on the basis of some of the factors which we have mentioned here. Okay, so let us go to the next definition. As we have said that the definitions are started with alphabets. So another definition starting with alphabet A should be Appellate Joint Commissioner of Taxes. So who is an Appellate Joint Commissioner of Taxes? Appellate Joint Commissioner of Taxes is a person appointed to be an Appellate Joint Commissioner of Taxes under Section 3 of the Income Tax Ordinance 1984. That means under Section 3 of the ordinance, it has been said who would be appointed as an Appellate Joint Commissioner of Taxes. So the definition says that anybody who is appointed to be an Appellate Joint Commissioner of Taxes is an Appellate Joint Commissioner of Taxes. And an Appellate Joint Commissioner of Taxes also includes an Appellate Additional Commissioner of Taxes. So whenever you hear that this gentleman is an Appellate Additional Commissioner of Taxes, it also means that he is the same officer as the Appellate Joint Commissioner of Taxes function-wise. That means functions of an Appellate Additional Commissioner of Taxes is the same as that of an Appellate Joint Commissioner of Taxes. There is no difference between the functions of the two officers. Only difference between the two is the scale of pay. That means the Appellate Additional Commissioner of Taxes receives a higher pay than that of the Appellate Joint Commissioner. That's the difference, but they have got the same power and they have got the same responsibilities. But what he does, an appellate joint commissioner of taxes, what is the function of the appellate joint commissioner of taxes? The function of an appellate joint commissioner of taxes is to hear the appeals preferred by the assessees or taxpayers. So you know that assessment is made by the assessing officers, and assessing officers are deputy commissioners of taxes, assistant commissioners of taxes, and an extra assistant commissioner of taxes. These are the three types of officers who are responsible for making assessments. So whenever an assessment is made by a deputy commissioner of taxes, the assessee may not be happy with the decision given by the DCT. So in that case, he contests the case. How he contests the case? He actually prefers an appeal to the appellate joint commissioner or appellate additional commissioner. And the appellate joint commissioner hears the case. Hears the case means he hears the arguments given by the taxpayer or the assessee. And if the arguments are justified, reasonable, in that case, the appellate joint commissioner of taxes takes them into his cognizance, and the order of the deputy commissioner of taxes is revised, and he instructs the deputy commissioner of taxes to revise the assessment order as per his directions. So what the deputy commissioner of taxes do? The deputy commissioner of taxes revises the assessment order as per instructions given by the appellate joint commissioner. So that is called revising the assessment order under section 156. When the decision is given by the appellate joint commissioner of taxes, it has to be revised by the DCT, and then the assessment is revised under section 156. So this is the function of the appellate joint commissioner of taxes, and the appellate joint commissioner of taxes is below the rank of the appellate additional commissioner of taxes, but they have got the same functions as I have said to you earlier, and he is also under the control of the commissioner of taxes appeals. Commissioner of taxes appeals is the head of the zone, appellate zone. So administratively, the commissioner of taxes appeals controls the officers under him. An appellate joint commissioner of taxes is also an officer under him in the same zone. So that's why the administrative matters are dealt with by the commissioner of taxes appeals. So the position of an appellate joint commissioner of taxes is clear. And then let us go to the next definition, which is appellate tribunal. And appellate tribunal, this is also formed under section 11 of the Income Tax Ordinance 1984. So what is this? This tribunal is a forum, and there should be a president of the tribunal, and there could also be some other members, and they actually form the tribunal. The tribunal hears the cases preferred by the taxpayers or assessors, or even by the department. By the department means by the deputy commissioner of taxes. So in either case, they will hear the appeals and then gives a decision. So when a case is preferred for appeal to the appellate tribunal, situation should be like this. The assessment order is passed by the deputy commissioner of taxes under section 84 or under section 83. or under any other section, 83, 2 oblique 93, something like that. So when the taxpayer is not satisfied with the decision given by the Deputy Commissioner of Taxes, he prefers an appeal to the Appellate Joint Commissioner of Taxes with the expectation that the Appellate Joint Commissioner of Taxes would do justice to the arguments given by him against the order of the Deputy Commissioner of Taxes. But when the decision given by the Appellate Joint Commissioner of Taxes is not favorable to the SSC or to the taxpayer, he can go to the tribunal. And in the tribunal, he will put up his arguments, and the tribunal would hear the case. The SSC could represent himself before the tribunal, or he could be represented by an ITP or a chartered accountant or an advocate or a cost and management accountant, whatever. So the tribunal gives decision and it is communicated to the Deputy Commissioner of Taxes. And the Deputy Commissioner of Taxes revises the assessment order according to the directives given by the tribunal. But still, the decision given by the tribunal cannot be accepted by the taxpayer or SSC. Accepted means cannot be satisfactory or favorable to the SSC. So in that case, the SSC has got the right to prefer another appeal before the High Court Division of the Supreme Court, subject to the condition that the case involves a law point. That means whenever the case involves a law point, the SSC or the taxpayer can go to the High Court Division of the Supreme Court. But if the case does not involve any law point, in that case, there is no provision for the SSC to go to the High Court Division of the Supreme Court. So we can say, or we can conclude, that when the case does not involve any law point, rather facts and figures, in that case, the SSC or the taxpayer cannot go to the High Court Division. So appellate tribunal would be the last forum, and the decision given by the appellate tribunal would be final. And the Deputy Commissioner of Taxes would revise the assessment order under section 159. So what we can do here, whenever an SSC comes to you, when you are a practicing chartered accountant, and he can come to you for your advice, and he can seek your advice with regard to whether the order of the appellate tribunal could be contested in the High Court Division of the Supreme Court. So you have to understand whether this is preferable for appeal to the High Court Division or not. So you have to see whether there is a law point involved in it. If not, then you can say that the case does not have any merit for preferring an appeal to the High Court Division of the Supreme Court. So that's why he has to accept the order or verdict given by the appellate tribunal. So as I said to you, in the tribunal, there would be a president. That means he is the chief of the tribunal, and along with him, there are members, maybe one member, maybe two members, or maybe three members. Sometimes you will see that there is an accountant member and there is a judicial member. So accountant member sometimes comes from the chartered accountant community, maybe. If he's a chartered accountant, he may be appointed as the accountant member of the tribunal. That is also possible. So this is all about the tribunal. But here, law point and cases involving facts and figures, you can just differentiate between the two. Let us suppose that the DCT made an assessment enhancing the shown sale of the SSC from 4 crore to 5 crore Tata per year. And he calculated the GP at the rate of 20% on that figure. And he determined the net profit of the business. So when the SSC is not satisfied with this assessment order passed by the Deputy Commissioner of Taxes, he can prefer an appeal to the appellate authority, that means appellate joint commissioner. And still, if he is not satisfied with the order given by the appellate joint commissioner, he can prefer an appeal to the appellate tribunal. Now let us see if the tribunal thinks that, okay, the decision given by the Deputy Commissioner of Taxes, that means the enhancement of sale at Taka 5 crores in place of Taka 4 crores is justified if the tribunal thinks. In that case, tribunal can keep the order as it is. That means tribunal will not interfere in the decision given by the DCT. In that case, the SSC or the taxpayer has to accept the decision. That means the determination of sale by the Deputy Commissioner of Taxes at Taka 5 crores should stand valid. So there is no scope that it could be changed, no scope. So this is with regard to cases involving facts and figures. But when there is a case involving law point, that means a legal decision has to be given. And expenditure was treated as a revenue expenditure, although that was a capital expenditure by the Deputy Commissioner of Taxes while making the assessment. So that is a law decision. That means if the DCT thinks that this is a revenue expenditure, but it should be a capital expenditure, or if the DCT thinks this is a capital expenditure, so as I say to you, that if the DCT thinks an expenditure to be capital expenditure or to be revenue expenditure, but it is not like that. SSC thinks that this expenditure is a revenue expenditure, but this is DCT thinks that this is a capital expenditure. So there might be a dispute between the two, between the understanding. In that case, this law point could go to the High Court division of the Supreme Court. So in the High Court, it could be decided whether this expenditure would be treated as a capital expenditure or as a revenue expenditure. So if it is treated as a revenue expenditure, definitely you understand very well that the net profit will be decreased. But if it is treated as a capital expenditure, then it is separate. It's not affecting the net profit, only to the extent of depreciation. So the cases, you have to look at those cases from the perspective of law point and facts and figures, and you have to advise the assessee or the taxpayer in that direction, what the assessee should do. He will depend, of course, on your advice. Okay, then come to the definition of approved gratuity fund. So gratuity fund, you understand that whenever somebody works with a company or with the government, there could be a gratuity fund from which he can have some benefits at the end of his retirement or at the time of his retirement. This is a fund which is created for the benefit of the employees who are working with the organization for a certain number of years. And the benefit that the SSC derives at the time of his retirement from the gratuity fund should be exempted from tax up to a certain limit, of course. So if the gratuity fund is not approved by the National Board of Revenue, in that case, the benefit that would be derived by the employees will not be exempted from tax. So the gratuity fund of a company should be approved by the National Board of Revenue, and it should be formed in that way. The rules and regulations would be complied with. And you will see that Part C of the first schedule at the end of the Income Tax Ordinance 1984, if you look at it, you will see Part C. And in Part C, it has been said about the formation of the gratuity fund and how to apply for the gratuity fund and what formalities have to be complied with, to whom it should be addressed, and who will approve of it. So if it is an approved gratuity fund, in that case, employees will be benefited out of that. Otherwise, they will not be benefited out of that. And gratuity, you understand that this is a benefit given to an employee in recognition of his services to the company. So if you work with the company for a number of years, so the conditions will be set by the company. And of course, there is a gratuity fund with the government, and government, of course, pays, benefit out of the gratuity fund, which is calculated in a little bit different way. Like whenever an employee actually goes into retirement, so the last basic of his salary would be taken into account. Let us suppose that an employee rose to the highest position of the government, and he was drawing a salary of Taka 82,000 per month, which was the basic salary. So if he had received 82,000 Taka per month as his last pay or last basic, and he has gone into retirement, in that stage, his gratuity fund would be calculated, or gratuity benefit would be calculated by the government. How to calculate that? So the basic salary, last basic salary is very important in case of a government servant. 82,000 Taka as the last basic salary, and you have to calculate 90% of that amount. And if you calculate 90% of that amount, which comes to, I think, 73,800 taka. That is 90% of the basic. And this 73,800 taka should be divided into two parts. So it should be 36,900 taka in one part. So this 36,900 taka would be treated as pension money per month of the employee. That is the pension money, which is determined by the government. However, the medical allowance would be added to it, and every year there would be an increment of 5%. So that's different thing. But the basic pension money is 36,900 taka. On the other hand, another 36,900 taka we calculated, and that 36,900 taka has to be multiplied by 230, and the total figure will come to taka 84 lakhs 87,000 or something like that. So that is the figure which is given to the employee as the gratuity money, and that money which is received by the employee will be exempt from tax. If this gratuity money does not exceed taka 2 crores 50 lakhs, then it will not be taxed. And if it exceeds 2 crores 50 lakhs, it will then be taxed. So that is all about the gratuity money received by an employee. And then come to the approved superannuation fund or pension fund. So this superannuation or pension fund is almost the same, and we have actually mentioned about the pension money to be received by an employee of the government. But in case of private companies, the superannuation fund or pension fund has to be created, and that should be created as per Part A of the first schedule. That means Part A of the first schedule will dictate you how to proceed with the application for the pension fund or superannuation fund. So if you establish the fund in that way, following the procedures given by the Income Tax Ordinance 1984, as per Part C of the first schedule, in that case, this will be approved by the National Board of Revenue. So whenever pension money will be given to an employee from a company, that pension money will be treated as exempt from tax. And in case of a government employee, of course, whenever he receives pension money from the government, this is exempted from tax. So this is important because the pension fund should be approved by the National Board of Revenue. Otherwise, the benefit that will be received by an employee will not be exempted from tax. So you have to understand when the fund will be approved by the government or not, how to apply for that, and how will the board approve of it. You have to submit all the papers to the Commissioner of Taxes of your jurisdiction, and he will recommend it to the National Board of Revenue for approval. And in that way, the approval will come to you. Then we can go to the definition of SSC. Who is an SSC? SSC is a term that is used in the income tax arena. That means income tax officers, practitioners, accountants, chartered accountants, first accountants, they all know who an SSC is. But the general masses of the country, they do not know who an assessee is, they know that whoever pays tax is a taxpayer. So that is the common term used by the general masses. So that's why this term is very common to the people related to income tax. And who is an assessee? Generally, what we understand, person who pays tax is an assessee. Person who has been served with the notice of income tax is an assessee. Person who is entitled to having a refund from the government for tax purposes or from the taxes department is treated as an assessee. And the person who has received a TIN certificate is also an assessee. And a person on whom penalty has been imposed, he is also an assessee. A person on whom notice has been served in order for him to submit the return, he is also an assessee. So an assessee could be an individual, an assessee could be a firm, an assessee could be a company, could be an association of persons, could be a fund, could be an artificial juridical person, etc., etc. So all these are actually mentioned in the Income Tax Ordinance, 1984. Okay. And now, if somebody wants to buy some savings instruments from the government, he has to submit a return to the Deputy Commissioner of Taxes. In that case also, he would be treated as an assessee, because if he has got an income, he is an assessee. If he does not get an income, he is not an assessee, but still then he has to submit the return. So if he has to submit the return, he will be treated as an assessee. Your income might be nil or your income might be non-taxable. And generally, we understand that when a person has got an income, income means revenue income, income means profit, income means any revenue receipt. So whenever a person has got an income and it crosses the exemption limit, in that case, he would be treated as an assessee. So the general exemption limit, you understand what is called a general exemption limit. In normal cases, it is 3 lakhs taka per year. If you have, as an individual, an income of 3 lakhs, that is the general exemption limit up to that amount. But if it crosses, if your income crosses that limit, it is taxable. And in that case, you are an assessee and you are supposed to submit a return before the Deputy Commissioner of Taxes. And then let us move to the definition of an assessment year. What is an assessment year? Do you know what is an assessment year? Assessment year, by general term, we mean that the year in which assessment would be made by the Deputy Commissioner of Taxes. That means you have submitted your return before the Deputy Commissioner of Taxes and he will make an assessment on the income you have shown. So this is a 12-month period, starting from the 1st day of July and ending on the 30th day of June of the fiscal year. So this is the time when you are going to submit your return. That means the 1st of July, which has started. That was the beginning of the assessment year. And up to the 30th day of June next year, the assessment year would continue. And during this period, the DCT will be making assessments and you have to submit the return. So you can submit the return under section 75. And if you do not submit the return under section 75, you can submit the return under section 77 as well. Or even you can submit the return under section 93 when the assessment year process the period. So the assessment year is the year in which assessment would be made for the income you earned during the previous income year. That means if your assessment is done this year, it means that you earned an income for the income year 2021 and 2022. During that year, you earned an income for which your assessment has to be completed by the Deputy Commissioner of Taxes. So after that, we can go to the definition of Assistant Commissioner of Taxes. That is also a definition which starts with alphabet A, letter A. So who is an Assistant Commissioner of Taxes and what is his function? Any understanding about him? An Assistant Commissioner of Taxes is a person appointed to be an Assistant Commissioner of Taxes under Section 3 of the Income Tax Ordinance 1984. So he is an assessing officer. And this is the entry point or entry post to the Income Tax Department. Generally, he is appointed by the National Board of Revenue, and he is recruited through the Public Service Commission. The Public Service Commission conducts the examination, that is the BCS examination, and through the BCS examination, written and oral, Assistant Commissioners of Taxes are recruited, and they are posted to the National Board of Revenue. So this is the position which is called entry position in the Income Tax Department, and they are all Class 1 officers. But some Assistant Commissioners of Taxes are also promoted to this rank from the position of Extra Assistant Commissioner of Taxes. That means they are promoted from a junior position to the position of an Assistant Commissioner of Taxes. But their functions are the same. The only difference is with regard to the scale. And the function that an Assistant Commissioner of Taxes performs is also performed by an Extra Assistant Commissioner of Taxes and the Deputy Commissioner of Taxes. So all these three types of officers are called assessing officers. And whatever function is performed by an assistant commissioner of taxes is also performed by the deputy commissioner of taxes and the extra assistant commissioner of taxes. And in the definition of a DCT, that means deputy commissioner of taxes, you will see that the deputy commissioner of taxes includes the deputy commissioner of taxes, the assistant commissioner of taxes, and the extra assistant commissioner of taxes. So all these three types of officers are doing the same function. Then come to the definition of Bangladeshi company. So it starts with the alphabet B or letter B. So Bangladeshi company, it means that it is a company of course, and it is incorporated under the Companies Act 1994. Before the enactment of the Companies Act 1994, there was another act which was called Companies Act 1913. So the Companies Act 1913 has been replaced by the Companies Act 1994. And whenever a company has been formed or incorporated under the Companies Act 1994 or 1913, they are treated as companies. And their registered offices definitely are in Bangladesh. So while incorporating a company under the Companies Act 1994, you have to fulfill some conditions. That means there should be a name of the company. There should be an objective of the company. There should be a location of the company. Sometimes this is called situation of the company. And capital of the company along with liabilities of the company. So these are needed for formation of a company or incorporation of a company. And an application for incorporation should be addressed to the Register of Registered Companies and Firms. So the registrar is the chief of the office of the Register of Registered Companies and Firms. This is under the Ministry of Commerce. And generally, the Register of Registered Companies and Firms should be at least a joint secretary. He might be an additional secretary as well in some cases, of course. So he is the person who actually decides which companies should be incorporated with the Register of Registered Companies and Firms and who would be given the certificate in order to operate business. And as I have mentioned to you, that there should be at least 5 clauses. That is mandatory. All these clauses are actually mandatory to mention in the memorandum of association of the company. There are 2 important documents for incorporation of a company, and the 2 documents are the memorandum of association and the articles of association. So in the memorandum of association, you will find 5 clauses. One clause should be name clause, another clause should be objective clause, another clause should be situation clause, another clause should be liability clause, and another clause should be capital clause. These are the clauses that have to be mentioned in the memorandum of association, and you have to comply with all the clauses. And afterwards, the Register of Joint Stock Companies and Firms would get the company incorporated. And since your registered office is in Bangladesh and also you are incorporated under the Companies Act 1994 or 1913, you should be treated as a Bangladeshi company. Then come to the definition of a banking company. What is a banking company? It is similar to that of a company, but the business of the company is little different because a banking company takes deposits from the public and lends money to the public. So the interest it is receiving from the public for the lending of the capital is its income. And of course, it has got some other functions like foreign currency dealing. It deals with the foreign currency. It also sells foreign currency. Sometimes purchases foreign currency. So these are the activities of a banking company in Bangladesh. And banking company means a company but dealing with banking business. And the banking companies are regulated by the Banking Companies Act 1991. So that should be kept in mind. Then come to the definition of board. Here board means National Board of Revenue, no other board. There might be some other boards in the country. You will see water board, you will see electricity board, you will see gas board, or you will see some other boards or board of investment, something like that. But here, when we mention board under the income tax ordinance, it means that the National Board of Revenue, which is the highest authority of the income tax and indirect taxes as well. And the board is actually headed by the chairman of the National Board of Revenue, who is the secretary of the Internal Resources Division. So a person who is the secretary of the Internal Resources Division is the ex officio chairman of the National Board of Revenue. So it could be a question to be asked whether the secretary of the Internal Resources Division and the chairman of the National Board of Revenue are the same person or they are different persons. That could be a question to be asked. Then come to the definition of business. What is a business? Business includes any trade, commerce or manufacture, or any adventure or concern in the nature of trade, commerce, and manufacture. So a business could be a venture, could be a trade, could be manufacturing activity, trading activity, etc., etc. So which are actually profit oriented or which actually makes profit. So in that way, a business could be defined. Then come to the definition of capital asset. Capital asset is also very important for you to understand what a capital asset is. There are so many assets of the business. And if you look at the balance sheet of a business, you will see there are current assets, there are liquid assets, there are fixed assets, there are circulating assets, there are intangible assets. So many assets are there. But here you have to know about the capital asset. What is a capital asset? Why is it necessary for you to know? That is important for you. Why it is necessary for you. It is necessary for you to understand because you will see there is a source of income which is called income from capital gains. And if you look at section 31, you will see you can calculate income from capital gains under that section. And capital gain is also one of the sources of income. You have got a number of sources of income. Income from salaries, income from interest on securities, income from house property, income from agriculture, income from business or profession, and income from capital gain, and income from other source. So these are the sources of income. Under section 21, you will see income from salaries and wages. Section 22 says about income from interest on securities. Section 24 says about income from house property. Section 26 says income from agriculture. Section 28 says income from 26 says about income from agriculture, and 28 says about income from business or profession. And section 31 says about income from capital gain, and 33 says about income from other sources. So these are the sources of income. You will see in the Income Tax Ordinance 1984. So there is a source of income which is called capital gain under section 31. So in order to calculate the capital gain, you need to know the capital asset. Because if there is no capital asset, capital gain will not arise. When you have got a capital asset, you can sell it out to somebody. And when you sell it out to somebody, in that case, the capital gain may arise. So if it is not a capital asset, in that case, capital gain will not arise. That's why it is very much important for you to understand which asset could be identified as capital asset. So definition has been given here under section 2. And what definition has been given is that capital asset means property of any kind held by an assessor, whether or not connected with his business or profession, but does not include the following. So what we understand is that capital asset would be any asset, whether related to business or not, or it could be related to profession, or may not be related to profession, but capital asset does not include any stock in trade, consumable stores or raw materials held for the purpose of his business or profession. So if you have some raw materials, stock of raw materials or stock of goods, consumable stores, etc., held for the purpose of business, that would not be treated as a capital asset. And personal effects, that means personal effects are not also included in capital assets. What are the personal effects? The personal effects are movable properties. And it could be a bike, it could be a motorbike, it could be a car, it could be jewelry, it could be computer, it could be laptop, or maybe watches, diamonds, semi-precious stones, whatever they are. But this should not be connected to your business or profession. That means you cannot use the property for business or professional purposes. Meaning that if you have a car and if you do not use it for your professional purposes or business purposes, in that case, it will not be treated as a capital asset. So most importantly, whenever you have got a capital asset and you are using it for your business, and you are selling it out to somebody else, in that case, capital gain will arise. Otherwise, capital gain would not arise. So that you have to understand. And then come to the definition, chartered accountant. Who is a chartered accountant? So you will also become a chartered accountant after you pass the examination. And there are 3 levels of examinations for qualifying as a chartered accountant. The certificate level, the professional level, and the advanced level. So there are 3 stages or phases under which you have to sit for the examinations. There are 7 subjects in the certificate level. There are also 7 subjects in the professional level, and there are 3 subjects in the advanced level. A total mark of 17 subjects should be 1600. And if you pass all the 3 stages of the examination, you will become a qualified chartered accountant. And this is regulated by the Chartered Accountants Order number 2, 1973. And the Institute of Chartered Accountants of Bangladesh has got the authority to regulate the profession of an accountant and matters connected therewith. So you will be given a certificate of practice by the Institute of Chartered Accountants of Bangladesh, and chartered accountant should be a member of the institute. Whenever you become a member of the institute, you can practice as an independent chartered accountant or auditor, whatever it is, or you can work with a company. That is also possible. So you have got the right to audit a listed company, which is called statutory audit. And the statutory audit could be conducted by a chartered accountant only, not by others. So the position of a chartered accountant is very important for the economy of the country, for the business of the country. And this is, of course, a prestigious position in the society, because you can have a job, very good job, white collar job in the country as well as abroad. So we can move to the next definition, which is called commissioner. Commissioner means a person appointed to be a commissioner of taxes under section appointed to be a commissioner of taxes under section 3 of the Income Tax Ordinance 1984. Meaning that commissioner, when we say, it means it's commissioner of taxes, not commissioner, because commissioner may be in other companies or organizations. So maybe trade commissioner, maybe commissioner in the BSEC, Bangladesh Securities and Exchange Commission, maybe in some other organizations. Of course, even in the city corporation, you will see commissioners. So those commissioners are different. But when under the Income Tax Act, we will mention commissioner, it would mean the commissioner of taxes. As we have said before, that a commissioner of taxes could be of 2 types. One is commissioner of taxes, who is in charge of a zone, and another commissioner of taxes appeals, who is also in charge of a zone, but there is an appeal zone. So there are two types of commissioners, but both of them are commissioners. At the same time, you have to know that a person who is currently holding the charge of a commissioner, but actually he is not promoted to the rank of a commissioner. Basically, he is an additional commissioner of taxes, and he has been given the charge by the board. That means the National Board of Revenue. He will also be treated as a commissioner of taxes in the eye of law, because whatever function he will perform will be treated as has been done under the authorities given to a commissioner of taxes. And then, as I mentioned to you earlier, Commissioner of Taxes Appeals, he is also a person appointed to be a Commissioner of Taxes Appeals under Section 3, and includes a person appointed to hold current charge of a Commissioner of Taxes Appeals. So in that case also, whenever an appellate additional commissioner of taxes is given the charge of a commissioner of taxes appeals, he will also be treated as a commissioner of taxes appeals in the eye of law. Then come to the definition of company. Company means a company defined under the Companies Act 1994 or under the Companies Act 1930. So whenever the company was incorporated under any act prevailing in the country, so that should be treated as a company. If a banking company is there, it will also be treated as a company. And if there is a financial institution, that will also be treated as a company. Or insurance body will also be treated as a company. But you should just know about some tricky points. And the points are that a company could be a group of companies, maybe. So a company could be formed with an individual, with a firm, with another company, etc. So if there is an association or combination of persons called by whatever name, so if there is an association or combination of persons, and then you will see that one person is there who is a or which is a company. So if there are 10 individuals and one company, which is also included in the association, in that case, that association would be treated as a company because one member of the association is a company. So that's why it would be a company. Any association or body incorporated by or under the laws of a country outside Bangladesh. That means if there is an association here or a body corporate which was incorporated under any law outside of Bangladesh, in that case, it would also be treated as a company. And any foreign association or body not incorporated by or under any law, which the board may, by special order, declare to be a company for the purpose of this ordinance. That means when there is a foreign association or body operating here in Bangladesh, but which is not incorporated here or not incorporated under any law, it would be treated as a company if the National Board of Revenue thinks fit. If the National Board of Revenue thinks that this should be treated as a company since it is a foreign association operating in Bangladesh and it is not incorporated under any law outside of Bangladesh, in that case it would be treated as a company. So the National Board of Revenue has got the right, legal right to do it. Then come to the definition of a cooperative society. So what is a cooperative society? It means that there would be a number of members of the cooperative society. So it is just regulated by the Cooperative Societies Act 2001. And there could be a good number of members doing business together. Say, for example, whenever there is a cooperative society of 50 members in a village who are supplying milk to the cooperative society, and the society is taking responsibility to sell the milk to the wholesalers or to supermarkets, etc. And the money which it receives is distributed among the suppliers of milk. So in that way, it is functioning as a cooperative society in the interest of all the members of the society. Then come to the definition of cost and management accountant. A cost and management accountant is like a chartered accountant, although there are differences between the two. A chartered accountant can conduct statutory audit. He or she can work as an external auditor. But a cost and management accountant cannot conduct any statutory audit, and he or she does not have any auditing function. And a chartered accountant undergoes internship program in a firm for 3 years at least, or in some cases 2 years. But a cost and management accountant does not undergo any such training or internship program. So that is the difference between the two. But they are also regulated by the Cost and Management Accountants Act 2018. And you are regulated by the Chartered Accountants Order number 2 of 1973. That means President's Order number 2. Then come to the definition of dividend. What is called dividend? Any idea about the definition of dividend? Dividend is part of the profit. A company is making a profit, and out of the profit, dividend could be distributed among the shareholders. So it actually applies to companies. And when the company makes profit and tax is paid on them, on the profit, in that case, the remaining profit or the after-tax profit is taken into account for dividend. So the after-tax profit could be paid to the shareholders as a percentage. That means when after-tax profit is, say, 10 lakhs taka, and the company decides, that's the annual general meeting of the company decides that 10% of this after-tax profit should be distributed as dividend to the shareholders, then it becomes dividend. And the remaining part of the after-tax profit lies in the business, which is called the retained earning. So in general, the after-tax profit is the profit from which dividend is distributed among the shareholders. But out of the accumulated profit or retained earning, the dividend could also be distributed to the shareholders. If the company incurs a loss this year, still then it would be able to distribute dividend if it has got accumulated profit in the previous years. So that is also possible. And definition says that any distribution by a company of accumulated profits, whether capitalized or not, if such distribution entails the release by the company to its shareholders of all or any part of its assets and reserves. So the definition means that if the company has got accumulated profit and if it is distributed among the shareholders by the company, it becomes a dividend. And the profit remitted outside Bangladesh by a company not incorporated in Bangladesh under the Companies Act 1994 should be treated as dividend. That means when the company is not incorporated in Bangladesh under the Companies Act 1994, and if it remits profit outside Bangladesh, in that case, that profit would be treated as dividend. And another characteristic of dividend could be any payment by a private company of any sum, whether as representing a part of the assets of the company or otherwise, by way of advance or loan to a shareholder, or any payment by any such company on behalf or for the individual benefit of any such shareholder to the extent to which the company in either case possesses accumulated profit. So a private company gives an advance or loan to a shareholder or makes a payment to a third person on behalf of the shareholder. In that case, it would be treated as dividend. But there is an exception to that. If the company's business is lending money to people, and if it is the substantial part of its business, that means when the substantial part of the business of the company is lending money, and that company has given an advance to the shareholder, in that case, that advance would not be treated as a dividend because this is the business of the company. And whenever you will see that at the time of liquidation of a company, assets are, or the value of the assets or the sale proceeds of the assets are being distributed among the shareholders. In that case, that amount would not be treated as a dividend given to a shareholder. So it has been done for the liquidation of the company. So that's why it's not a dividend. And then come to the definition of an employee. Employee means person who is working with the company, but this is irrespective of the position held by the person concerned. That means the managing director is also an employee, the finance director is an employee, the lower division clerk, he is also an employee. So employee could be anybody who is working with the management of the company or who is managing the management of affairs of the company in some way or other. So why this definition is important? This definition is important because of the reason that if the income tax department wants to serve a notice on the managing director of the company, thinking that he is the appropriate employee to serve the notice on, the managing director may be away from the company for a few months. He might be abroad. So the income tax department does not have to stay or wait for the managing director to come back to Bangladesh. So in that case, what the income tax department would do, it would serve a notice on any of the officers available working with the management of the company. So the department can serve a notice on any of the officers or any of the staff members. And in that case, the service of notice should be treated as valid. That's why employee is important for you to understand. Okay, let us just take a break for a few minutes and come back again. Okay, I hope everybody is here. We can go to next definition, which is fair market value. And this is in relation to capital asset. Since capital gain arises out of the capital asset, we have to know the sale price of the capital asset. And the sale price, which is shown by the SSC, is not always correct. So if the sale price is not correct or is not representative of the market price, then the calculation of capital gain will not be proper. So in that case, the definition of fair market value is very important. You have to calculate the fair market value of the capital asset in order to calculate the capital gain. So whenever the SSC shows that the sale value of this building is 5 crores, but actually it should have been 6 crores taka in the opinion of the Deputy Commissioner of Taxes. This is important from the viewpoint of revenue. And what he will do, he has to calculate the fair market value of the building. How would he do it? Here, the system has been given, the concept has been given here. That is, the fair market value means the price which such asset means capital asset, would ordinarily fetch on sale in the open market on the relevant day. That means when the sale was made, that means the sale occurred on that particular day, the asset would have fetched the amount ordinarily in the market, meaning that if the asset was offered to the public in the open market, the price which it could fetch that day would be the fair market value of such an asset. And when the fair market value cannot be determined, then the Deputy Commissioner of Taxes has got the discretion or the power to determine the fair market value. And he can do it with the approval in writing of the inspecting joint or additional commissioner of taxes. Say, for example, an asset was actually sold out 2 years ago, and now the DCT is making an assessment, and he has to calculate the capital gain out of the sale of the capital asset. So it is really difficult for him to determine the price on that day 2 years ago. So in that case, he can estimate it on the basis of the prevailing price of such an asset in that particular year. Maybe there are some records, or maybe there was an inspection report that was made by the inspector of taxes for another asset of similar nature in that year. Or the inspector of taxes could be sent to the place of business at this moment, and he can ask the people about the price that was prevailing that year for such an asset. So in that case, he can calculate the fair market value of the capital asset in order to determine the capital gain. So that is the way that fair market value has to be determined, and it is necessary in order to calculate a proper or an appropriate amount of capital gain. Now we can move to the definition of firm. When we say firm, if you are in a firm, that is in a chartered accountant's firm, it could be a little bit different from the real meaning of a firm. When you say firm, it should be a firm, that means a partnership firm under the Partnership Act 1932. We have got a Partnership Act which actually enacted in 1932, and it has been in prevalence in the country. It has not been changed. Maybe there was some amendments in different years, but the act has remained the same because it has not been replaced by a new act. And firm has been defined by the Partnership Act 1932. So I understand that everybody, if you know the definition of a firm, which is important for you to know. And this is a relation or relationship between the persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. That means there could be a number of partners, and the minimum number of partners should be 2 in a firm, and the maximum number of partners should be 20. So what does it mean? It means that it's a relationship between the persons. Maybe there are 2 persons in a firm, and the partnership should be the relationship between the 2 persons. Or if there are more than 2 persons, then it is, of course, the relationship between the persons who have agreed to share the profits of a business. That means they have got an agreement that they would like to share the profits of a business. And that business has to be carried on by all or any one of them acting for all. It means that everybody or every partner can participate in the business, or one partner on behalf of all can participate in the management. That is also possible. So that's why you will see that there are dormant partners in a firm, there are active partners in a firm, there are sleeping partners in a firm, whatever it is. So this is regulated by the Partnership Act 1932, and the Register of Joint Stock Companies and Firms would register the firms when they are registered, but there are unregistered firms as well, but still these are also treated as firms. Important characteristic of the firm is that the liabilities are shared severally and jointly by the partners. That means a partner would be held responsible for the liabilities of the firm severally and jointly, that is individually and jointly. So that is the most important aspect of the Partnership Act 1932. And you might have a partnership firm for banking companies, that is the banks. And in that case, the maximum number of partners in a bank when it is a partnership would be 10, not more than 10. And the firm that you are in sometimes when you are an intern, that means you are working with a firm. Here, the partnership may mean differently because there is a firm which is owned by one individual only, one individual chartered accountant. So this is still called a firm, but this is not actually a firm. This is a sole tradership or proprietorship concern. So that's why a little bit different for the chartered accountants who are operating as independent chartered accountants. That means practicing chartered accountants. Then come to the definition of income. It is very important for you to understand what income is. Income is very important because tax will be imposed on the income. An income could be profit, could be gain, could be revenue receipt on which tax could be imposed, or it could be any amount which is subject to collection and deduction of tax at source under any provisions of this ordinance. So whenever the authority deducts tax from a payment, it is income. And importantly, you have to understand that income is not only income, loss is also income, because the profit might have a profit or a loss. Every year, the business or company is not supposed to make any profit. Rather, it can incur losses in some years. So that's why the profit also includes loss. And another important point is that there are some allowable expenditures depending on the quantum of income. Say, for example, when entertainment allowance is given by the Deputy Commissioner of Taxes, that means when he allows entertainment expenditure claimed by the SSC or the taxpayer, what he does, he actually follows Rule 65 of the Income Tax Rules 1984. As per Rule 65, it means that the entertainment allowance would be paid on a specific amount of the net profit. So there are slabs. On the first slab, you have to allow a certain percentage as entertainment allowance, and on the remaining amount, you can charge another percentage. So there would be an entertainment allowance allowable under Rule 65 of Income Tax Rules 1984. So whatever claim has been made by the SSC will not be accepted, rather a part of it would be accepted. So what I am telling you is that if the business does not make a profit for a particular year, whether entertainment allowance could be given, could be allowed in calculating the profit or loss of the business. So that is the question I want to make here. The entertainment allowance has to be allowed to the business, even if the business incurs a loss, because income includes loss as well. So that's why the loss would also be treated as income, and this is not a positive income, rather a negative income. So that's why the entertainment allowance would have to be allowed to the business in calculating the profit or loss. And better, you can say that when tax is imposed on an income, that is really income of the business or an individual. When there is a revenue receipt, it is an income. So in order to become an income, it should be revenue receipt in general. But in some cases, capital receipt should also be there, included in income. If there is a provision with regard to that in the Income Tax Ordinance 1984. So for example, the capital gain which will arise from the sale of a capital asset, it is mentioned in the Income Tax Ordinance under Section 31. So that's why capital gain would also be treated as income. But in general, capital gain or capital receipt would not be treated as income. Say, for example, you are receiving a gift from your father or mother. So whenever you receive a gift, that is a capital receipt, not a revenue receipt. So that's why it will not be taxed, unless otherwise there are provisions with regard to that. And then come to the definition of interest. What is interest? Whenever you are borrowing money from the bank or non-banking financial institutions, you have to pay a charge. So when you are paying a charge on the borrowed capital, whenever there is a loan or whenever there is an advance, money given to you by a bank or a non-banking financial institution, in that case, the charge would be treated as interest you have paid to the bank. And the interest that has been received by the bank would be treated as income of the bank. So this is actually cost of the capital. That means you are receiving a capital, maybe borrowed capital, not equity capital, and the cost of the capital would be interest. Okay. Sometimes you will see that there are some banks which are called Islamic banks, and those banks actually say that a service charge is being imposed on the clients, and that service charge is actually interest in disguise, because they do not call it interest, rather they call it service charge. So this is also for extending loan to you or extending advance to you. So it's a different name, but in the eye of income tax, this is also interest. That come to the definition of the market value. So market value, you understand very well. It is as good as the fair market value, as we have discussed before. And market value means it is not the value when you can determine it when the price, when the product is inside your godown. Market value could differ from time to time, because if you sell out the product now, it can fetch one price. But if you sell out the product after 2 months, it can fetch another value. So it would depend, depending on various factors of the market. So market value is the selling price on a particular day in a particular year. And the price which is, the farmer or the businessman is going to fetch by selling its product in the market, or it could be by exchanging the product with another product of a particular person or a company. That could also be treated as the market price, and the price would be determined on the factors prevailing in the market. And that would also depend on the situation of the market, and that should be taken into cognizance by the Deputy Commissioner of Taxes. And what should be the market value of the product? If you sell out your product at a lower price than the market value, but the Deputy Commissioner of Taxes may not accept it, taking into account the prevailing market price if it is higher, or if similar product is sold out in the market at a higher price. So in that case, market value would be the product which it would ordinarily fetch from the market while it is offered on sale. Then come to the definition of perquisite. Perquisite is very important for you, especially for the taxpayers who are individuals, who are working with an organization or with a company, receiving salary and wages from the employer. So that's why you have to understand what are salaries and wages and other emoluments, but perquisites would be different. If you have your basic salary, your medical allowance, your car allowance or conveyance allowance, your festival allowance, your advance salary, your arrear salary, all these are not included in the perquisite. So perquisite would be a little bit different. Whenever you are receiving a benefit, either in the form of cash or in cash equivalent, or whether it is convertible into money or not. But this is a benefit provided to an employee by the employer that would be treated as a perquisite. Say, for example, you are working with a company and the company pays the bill of your personal telephone kept in your residence. So you have got a personal telephone which you are maintaining in your residence, and the company actually pays the bill of your personal telephone. So this bill would be treated as perquisite you have received from the company. Similarly, if you have your children studying in schools and the tuition fees are paid by the company, in that case also the fee is received by you. That means the benefit received by you. Fee could be paid directly to the school, that is not a problem, but you have received a benefit. So you haven't received it in cash, rather you have received it in the form of a benefit. That means you have been paid the tuition fees by the employer, and you did not have to pay it off from your own fund. So that's why it was a benefit. And that kind of benefit is, of course, treated as perquisite. Then come to the definition of person. Person is very important in the Income Tax Ordinance 1984. By person, we mean an individual in general. But as per Income Tax Ordinance, this is not an individual only. Person includes an individual, an association of persons, a firm, a Hindu undivided family, a company, a fund, an artificial juridical person, or a municipal corporation, or a local authority, etc. So these are actually treated as persons. So whenever we mean a person, it does not only include individual, rather it includes any other entities as mentioned in the Income Tax Ordinance 1984. So that is very important for you to remember. And then come to the definition of profits in lieu of salary. Profits in lieu of salary is also very important for you to understand, because this is also part of your salary income under Section 21. If you want to calculate salary income under Section 21, you have to take into account the salaries, wages, medical allowances, conveyance allowances, any other allowances, advance salary, arrear salary, bonus, etc., whatever they are. But profit in lieu of salary is a little bit different, but it should also be included under Section 21. What type of amount it is received by an employee. So for example, there is a contract between an individual and the company. The contracts have been violated by the company. So for example, there are some modifications in the conditions of the contract. And for that reason, the employee has been, suffering losses, financial losses. So because of the conditions, or because of the amendments to the conditions, this gentleman, that is the employee, is suffering losses. So if the company understands that there would be a loss to the person concerned, so in that case, the company may offer the compensation money to the employee. And the company can say that, okay, because of some unavoidable circumstances, we have changed the conditions of your contract. And in that case, you have to suffer a little bit from the financial viewpoint. And that's why we are giving you a compensation money of 5 lakhs or 10 lakhs, whatever it is. So if that compensation money is to an employee, in that case, this compensation money would be treated as income while calculating the income from salaries under Section 21. Another example could be given. That means when an employee is supposed to get an amount from the provident fund at the time of his retirement or at the time of his leaving the job from that organization. In that case, the amount which he should receive should consist of the contributions made to the provident fund and the interest accrued thereon. So the total amount an employee would be receiving would consist of the contributions to the provident fund as well as the interest accrued thereon. But if he receives more than that amount, so for example, if the employee receives 1 crore taka at the time of his retirement from the provident fund, it should consist of the contributions made by him to the provident fund and the interest accrued thereon. If 1 crore taka is more than that amount, let us suppose that the contribution and interest jointly stand at taka 90 lakhs, but that gentleman has received taka 1 crore. So it is 10 lakhs taka more than the contribution and the interest accrued there. So this 10 lakh taka would be treated as profit in lieu of salary, which would be taxed by the income tax authority. So this point is very important for you to understand, because you may face this problem while you are working with a company. Maybe not in case of you, but maybe in case of other employees who are working with the organization you are working with. And then the definition of recognized provident fund. Recognized provident fund means a provident fund which has been and continues to be recognized by the commissioner in accordance with the provisions of Part B of the first schedule. So here also the commissioner means the commissioner of taxes, and you have to follow the provisions of Part B of the first schedule. And whenever you are forming a provident fund, you have to do it according to the provisions mentioned therein. So if you do it accordingly, in that case, the amount that would be given to the employees at the time of retirement would be receiving tax benefits. Otherwise, they will not be receiving tax benefits. So that is very important for you to know. And then come to the definition of a resident. What is resident? So resident is not similar to citizen. A resident is not a citizen of a country, and a non-resident may be a citizen of a country, or a foreigner could be a resident in another country. So if somebody comes from the UK and stays in Bangladesh, could be a resident in Bangladesh if he fulfills some of the conditions. So the determination of a resident is also very important for you, because in case of an individual, he should be resident or non-resident. And also in case of companies, firms, association of persons, or Hindu or divided families, they should also be residents or non-residents. So in case of individual, we can say that when a person stays in Bangladesh for a period of 182 days or more in an income year, he would be treated as a resident. And if somebody, as an individual, does not stay in Bangladesh for 182 days, rather less than that period, in that case, he cannot be treated as a resident. But he could be a resident if he fulfills another condition. And what is that condition? Another condition is that if he stays in Bangladesh for a period of 90 days or more, having previously been in Bangladesh for a period of 365 days or more during 4 years preceding the income year. In that case, he would also be treated as a resident. So there are two conditions, and you have to fulfill one of the two conditions. First condition is that you can stay in Bangladesh for a period of 182 days or more in an income year. And again, if you do not stay in the income year for 182 days, rather for a lower number of days, in that case, you have to fulfill another condition, and that condition is in the concerned income year, you have to stay here for at least 90 days or more, and having previously been in Bangladesh for a period of 365 days or more for the 4 years preceding that income year. In that case, you would be treated as a resident. And for the companies to become resident, the registered office should be located in Bangladesh. That means the management or affairs of the company has to be regulated in Bangladesh or inside Bangladesh with its registered office here. And for Hindu undivided families, association of persons, etc., the control and management of whose affairs has to be partly or fully located or situated in Bangladesh. And for trust fund or any other entity, the control and management of whose affairs is situated wholly in Bangladesh in that year. So for fund, trust fund, or entity, any other entity, the management should be wholly located in Bangladesh. And of course, the local authority or any other artificial juridical person, they will always remain as resident of Bangladesh because they are controlled by the existing law of Bangladesh, law of the soil. And a Bangladeshi company or any other company, the control and management of whose affairs is situated wholly in Bangladesh in that year. So in order to become for a company to be a resident, his management of affairs has to be wholly located in Bangladesh in an income year. Then come to the definition of salary. Salary would be any pay or wages, that means monthly pay or wages that would be treated as salary. Any other annuity, pension, or gratuity, those are also included in salary. And any fee, commission, allowance, perquisites, or profit in lieu of salary, in addition to salary, regular salary, and wages, they are also treated as salary. And an advance of salary or a leave encashment, these are also treated as salary. Then come to the definition of speculation business. What is a speculation business? I believe in general terms, you can understand what a speculation business is. Speculation business is the business in which there are fluctuations in prices and there is a sort of uncertainty or risk in doing it. And people are actually looking for windfall income by keeping an asset or by keeping a product. So let us suppose shares and securities. You are buying some shares in order to sell them out in a future date at a higher price. So you want to make a profit, which is a significant amount of money. So you are keeping the shares for 15 days or 30 days, and afterwards you are selling them out and out of that you are making a profit, and sometimes you are making a windfall profit. So the fact is that there are different fluctuations in prices, and sometimes you will see it is risky. So a lot of risk is involved in this business. So in that way, this becomes a speculation business. But whenever a trader is in agreement with another person to receive a supply of raw materials in order to manufacture a final product for onward delivery to another person in another country, maybe. So this is actually done in order to protect himself or herself from price fluctuations. And that is not for any windfall benefit, rather to protect himself from the fluctuations in prices. So the stability of the sale price would be there, or the stability of cost of production or cost of manufacture could be ensured by that. Because if you come into an agreement with a cotton trader in order for him to supply cotton to you, and the cotton would be used by you for making ready-made garments, which you can actually supply to a European trader. So you have reached an agreement with him saying that he will supply cotton to me for the next 2 years at this price and at this quantity, and there won't be any change in the price. So if he is agreeable to your proposal, definitely you can reach an agreement, and it indicates that you are trying to stabilize the price. The price would not be changed, and you can supply the product to the European trader at a fixed price, whatever you have agreed on, and simultaneously the cotton trader who is supplying you the raw materials, he will also continue to supply the raw material at the similar price. So that's why there is no change in the cost of manufacture or production, and also there is no change in the sale price of the product. So this would not be treated as a speculation business. This should be kept in mind by you. And then come to the definition of tax day. So tax day is very important for you, especially for the individuals who are going to submit the returns by the date. So this is a date actually, or day, which is the 30th day of November each year. And by that date, you have to submit the return. If you want to avoid hassles means if you want to submit the return under the self-assessment scheme, this is the day by which you have to submit the return. But you can submit the return any day before that date, starting from the 1st of July, that is starting from the assessment year. And this self-assessment scheme provides you some benefits, meaning that you can calculate your own total income and also the tax to be paid by you. And whenever you submit the return to the Deputy Commissioner of Taxes, he will issue a notice to you, and that notice would be treated as your assessment order. So this is the benefit you can derive out of that. But the tax day could be extended by the National Board of Revenue under certain circumstances. If the Board of Revenue thinks that it should be extended because of some unavoidable circumstances, meaning that there are calamities or there are some sort of recession or pandemic situation, etc., in the country, for which the people are not very much ready to submit the return by the tax day. And also, if you cannot submit the return by the tax day, you can get the time extended. Extended means you can apply to the Deputy Commissioner of Taxes for extension of the time, and he can extend the time for 2 months from the date of the tax day. And if you need some more time, yes, you can also get it done after applying to the Deputy Commissioner of Taxes. And in that case, the Deputy Commissioner of Taxes would seek the approval of the inspecting Joint Commissioner of Taxes in writing, and then he can again extend the date for another 2 months. So it means that you have got an extended date for 4 months after the tax day. So the time extension could be sought by the individual assessing in case of need, of course. And this tax day is now 30th day of November, but earlier this was 30th September, and again it was 15th September. And last year it was extended up to the 31st day of December because of the pandemic situation and economic recession in the country. So depends on the National Board of Revenue. And then come to the definition of transfer. Transfer is also very important for you to understand, because whenever the capital gain arises out of the capital assets have to be transferred. If the capital asset is not transferred, then capital gain cannot arise. So how the transfer should take place? Transfer could take place in the form of sale, or in the form of exchange, in the form of relinquishment of the assets, or in the form of extinguishment of the assets. So these are the conditions under which the transfer can take place. So when transfer takes place, it means that there is a price which has been received by somebody from another person. And since the transfer has taken place, the capital gain is set to arise out of the transfer. But if there is a gift of an asset, or if there is a will means you are making a will of your property in favor of somebody else. So will would not be treated as transfer, and gift will also not be treated as a transfer for capital gain purposes, of course. So whenever a gift has been made by a person to another person, in that case, the city would not be allowed to calculate the capital gain, and it could not be taxed. So that's the bar. And when there is a will, that means you are in deathbed, you are very much sick, and you have made a will of your property in favor of somebody else. So that will not be treated as transfer, and no capital gain arise out of that. And again, the distribution of assets of a company to its shareholders on its liquidation. That means when the company gets liquidated or dissolved, and if the distribution of assets takes place among the shareholders, that means the assets are distributed by the management among the shareholders, in that case, it will not be treated as transfer. It is not transfer. And any distribution of capital asset on the dissolution of a firm or other association of persons or on the partition of a Hindu undivided family. So when the capital assets of a Hindu undivided family or an association of persons or firms upon dissolution are distributed among the partners or members, in that case also, this will not be treated as a transfer of capital asset. So that will be treated as a mere distribution among the members or partners. So that's why the capital gain will not arise. So in order to calculate capital gain out of the transfer of the capital assets, you have to know what is actually capital asset and how the transfer takes place and what would be treated as transfer. So all the possession of a right of an asset is not transfer. So properties could be possessed by somebody by other means, and all these possessions cannot be treated as transfers. So that's the most important thing for you to know. I believe that we have covered the definitions or terminology chapter, and you have understood well, then fine. If you have any question to ask me, you can ask me the question. Otherwise, we can stop here. And I would like to thank you very much for your paying attention to this session. Thank you very much.
Thank you, sir. Good night, sir.
Good night.
Thank you, sir. Good night.
Good night.